All right, now I've got something that's really going to blow your mind because you're not going to believe it's true, but it is true. This is some research done by our friends at Earnings Beats, which is a resource Paul and I use. And this can actually be used by an investor or a trader. And again, it depends on what category you're in. But what this chart shows is by individual day of the month, how is the market done? So on the first of the month, how is it done compared to, for example, the 19th of the month? How does the beginning of the month compare to the end of the month or the middle of the month? Well, take a look at this on your screen, the left side of your chart, calendar day number 1. That's the best time to be invested in the market. Since 1950, the S&P 500, on average, on the first of the month, up 45%. Wow. Even the second of the month is good. Third of the month is good. Really, the entire beginning of the month is really good for the stock market. But then you take a look at the 19th of the month. Wow, 19 must be a really unlucky number. Again, since 1950, on the 19th of the month, the market's down about 33, 34%. Ouch. Now again, does that mean that on the first of the month, we're saying that the market always goes up? No. Are we saying that on the 19th of the month, the market always goes down? No. But again, this is kind of interesting information since 1950. I'll just point it out at the top of your screen. You can see highlighted from the 26th to the 6th, the very end of the month, beginning of the month, you can see the market's up about 21%. But from the 19th to the 25th, you can see that the market is down about 8%. So again, depending if you're an investor and a trader, you can use this information to say, generally speaking, the really end of the month, the beginning of the month is good. Well, I've got to be more careful towards the middle and the the 19th to the 25th. People often ask, well, how is this true? Why would this be happening? Really, the best explanation that we have is that a lot of big corporate retirement plans, pension plans, they get their payroll and their 401k contributions towards the end and the beginning of the month, and there's a huge amount of money that enters the market at the end and the beginning of the month. And so you have just this huge inflow of money from that, and that money is invested, and that probably explains a big reason why we see the numbers here on the screen. So again, some information you probably never have heard of before. You can use that to your benefit. How about days of the week? This is also true. You can tell by your screen, you look on the left, the market really doesn't like Mondays. Ouch, S&P 500, the NASDAQ is down on Mondays. However, the market does like Wednesdays and it does like Fridays. Ironically enough, today's Wednesday, the market's doing pretty well. Now again, does that mean that the market's always up on Wednesday? No, of course not. It doesn't mean that it's always down on Monday. But again, if you're thinking about making certain investment decisions, particularly in this case of a short term, when to get in, when to get out, Monday is not so good, Wednesday is a lot better. And this might be the most important part of this series of slides, the return of the market based on the calendar quarters. You can see that we've got the first quarter of the year, second quarter of the year, third quarter of the year, fourth quarter of the year. What's the best time to be invested in the market? Arguably, probably the best time is the fourth quarter, the quarter that we're coming up to, October, November, December. In fact, if we're going to salvage 2022 and we're going to get a rally, it's going to happen soon, if it's going to happen, right? Because you can see that seasonally, the market does significantly better in the fourth quarter of the year, October, November, December, than it does, for example, in the third quarter of the year. Does anyone know what quarter we're in right now? We're in the third quarter. We're in September, which is typically a very tough time. Now, again, does this mean that the market always goes up in the fourth quarter? No. But again, historically speaking, the rally, the bulls are looking forward to the fourth quarter.
Try to put those probabilities on your side, take advantage of them.
So anyway, really interesting information. Again, this could be recorded. You can go back and take a look at all this stuff for your info. And why don't we drive home this